there's one thing that I can, talk about today is fear of missing out.
There's a lot of that going on with the volatility in the market. We see people that have a fear of a housing bubble. They're wondering, is it time to be selling their business? So there's a lot of fear of missing out that's happening.
And it really affects, the tax return of every individual depending upon what decision they take because of the fear of missing out they have. Small example, if a person feels that, oh, this stock price is so high right now, I need to sell all my stock. He does not realize that, maybe just waiting for 2 months would have helped him push his gains to long term and still be fine even if the stock prices would have gone down a little bit, because now he must be paying ordinary income tax on that gains because he just sold the stock thinking about the fact that, oh my God, I'm going to miss the stock price.
There are also tools we have in place in the market where we can protect the stock price through trailing stops, through put option strategies. So there are ways that we can help protect that value while we're waiting for the proper time to sell the stock from a tax standpoint.
Isn't that amazing if the client just, decides to speak to the tax professional and, get an advice over it and then speak to the financial advisor if there is, something that they can do to merge both the advices that they've received. I mean, it's best. So I really agree to the fact that, it should not be that decisions should be taken over the fear of missing out. Selling of businesses, I mean, that is something which really involves planning. It needs, I would suggest that, starting from 6 months to a year, to have a legal team, to have a financial advisor to make sure that what are you going to do with the money? And at the same time, a tax planner to help you plan the taxes, because definitely there are ways where you can have a tax-free sale of business.
And if you think you're going to be selling your business, put a plan in place and stick to the plan. It can have a significant impact on your taxes. If you were to sell your plan, say, at 4.5 years versus 5 years, the tax impact of that sale is extremely different between the two. So it's important to start early, as early as possible in that exit strategy, and making sure you've got a sound process in place, one that you've had a conversation with both your tax preparer and your wealth manager about, so that you're planning the process out properly.
Yeah, that's correct. Also, being able to having a tax-free, that's where you're saving a lot of money in taxes, and at the same time having your goals set for life. Thinking about that today you're receiving $1 million in selling your business. When you end up paying your taxes, you will just be going home with $500,000. Whereas if you would have planned it for a year or, much before, it might help you just have $1 million where you can have a beautiful plan ahead, have something for your kids and whatnot.
In California, we just had Proposition 19 that was approved. And a lot of people went in and got irrevocable trust put in place in order to protect that property so that it would pass to their kids more tax efficiently. Unfortunately, we're not sure that those trusts are properly going to protect against Prop 19. And even if they do, we're not sure that Prop 19 is going to be around that long. And it may be changed, it may be taken out. And what I do know is that irrevocable trust is irrevocable. It's there. So it's, again, a reactionary if you've got a plan in place, follow the plan. Don't make quick decisions.
Yeah, especially the ones where you cannot go back on. Like, once it's done, it's done. If you sell your home, you sold your home. You cannot go back on that, deal. Where there are so many ways where you're selling your rental property or you're selling your principal residence. There are many things that I want clients to know that might make a huge difference if they just plan ahead of time.
Again, a really good reason to be sitting down with your wealth manager and your your tax preparer together in cooperation to put those plans in place.
Yeah, be strong and don't let the FOMO guide you.